So for today, our lesson is all about the accounting for shareholders' equity. So the components of the shareholders' equity include the share capital, the retained earnings, and the other components of equity. And we also have the deduction from the shareholders' equity, which is the treasury share. So the share capital is composed of the preference and the ordinary share capital. And we have the subscribed share capital, either for preference, if we have preference, and also for the ordinary share. So individually, they have their own subscribed share capital. If ever you have identified that the subscribed share capital is for preference share, you can just simply record it as subscribed preference share. Or if it is for ordinary shares, you can just write subscribed ordinary share. So para specific siya. Then we have subscription receivable. Uh, either either preference or ordinary depende to what type of share ang naay subscription receivable. And for easy tracing of the transactions, especially if there is collection on the subscription receivable, you can also label the subscription receivable according to the type of share. So, for example, you will write subscription receivable preference or preference shares, and subscription receivable ordinary or ordinary shares. Para when we go back to the entries, we can easily find the transaction related to the subscription receivable for a specific type of share. Then we have the share dividends distributable or stock dividends payable. So these are shares that are made as dividends. Then we have discount on share capital, then capital liquidated, and then we have the share premium, or they also call this as the additional paid-in capital. Next, we have the retained earnings, whether it is appropriated or unappropriated. So if na siya label ng appropriated, it is restricted. And if it's unappropriated, this means that this is free to use, especially for dividends declaration. Then the other components of the entity, we have the revaluation surplus. I think you are familiar with this one when we are accounting for property, plant, and equipment. This is usually the transaction wherein there is a revaluation surplus if we're using the revaluation method instead, or the revaluation model instead of the cost model. And then you have the cumulative unrealized fair value gains or losses through OCI. And we have translation differences of foreign operations for foreign exchange or translation of financial statements from foreign currencies to local currency. And then we have the effective portion of the cash flow hedges. And of course, we have the treasury shares, which is a deduction from the total shareholders' equity. The following are the transactions that affect the accounting for a corporation's equity. So we have the authorization, subscription, issuance, acquisition, reissuance, and retirement of shares. We have the origination of other equity instruments such as share options, detachable warrants, and equity component of compound financial instruments. So when we say compound financial instrument, so it could be a most common example ani is when you have your bonds payable and then convertible bonds. So it can be converted to equity. So ano siya, compound because naa siya equity and debt component. Then distribution to owners. So when we declare dividends and distribute the dividends. Transactions giving rise to other components of entity, and we have components of equity, sorry. Transactions giving rise to other components of equity. then recapitalization, and quasi-reorganization. Now, let's start with the first part of the shareholders' equity, or the first component of the shareholders' equity, and that is the share capital. So how do we account for the share capital? It's either through memorandum method, memorandum entry method, or the journal entry method. So in the memorandum method, you are using the memorandum, or you are going to write only a memo entry for the authorization of your capital, or to declare the authorized capitalization. Subsequent issuances of shares are credited to the share capital account. So although it's a memo entry at the authorization stage, the later transactions will have its journal entries. So only katorang authorization ang naay memo. For the journal entry method, the authorization has a journal entry. So ang journal entry niya would be debit unissued share capital and credit authorized share capital. That's why it's a journal entry method, because the authorization of the capitalization is journalized, while in the memo entry method or memorandum entry method, the authorization of the capitalization is recorded as a memo entry. In addition, for the journal entry method, any subsequent issuances will be credited to unissued share capital. Unlike sa memo entry that you're going to credit that to share capital. For journal entry, na additional nga word, unissued share capital. Then what are the classes of share capital? We have two. We have the ordinary share capital, or they call it common stock as well, and the preference share capital, or the preferred stock. So what are the basic rights of the ordinary shareholders? So you're called as an ordinary shareholders if you own, of course, ordinary shares. So ordinary shareholders have the following rights. They have the right to attend and vote in the shareholders meetings. They have the right to purchase additional shares, and this right is also called as the preemptive right, or the stock right. So the existing ordinary shareholders are given preference, or given the first priority to buy additional shares in the company before offering those shares to outsiders, or to those who are not yet owners of the company. So man na siya preemptive right. I think this is also discussed in the partnership and corporation law, right? About preemptive right. So ikaw unang offeran sa shares before they offer it to outsiders. Third is they have the right to share in the corporate profits, which is known as the right to dividends. And also, they have the right to share in the net assets of the corporation upon liquidation. So those are the rights of the ordinary shareholders. For stock corporation, voting rights are normally conferred to shareholders in proportion to their shareholdings. So it depends on the number of your shares kung pila sad ka buok ang imuhang voting rights. So the shareholder who holds more shares normally will have more voting rights. And also for the preemptive right, so the purpose of this one is to protect the shareholders from involuntary dilution of their ownership interests, because without this right, an ownership interest may be reduced by the issuance of additional shares without the shareholders' knowledge. And the additional information for the ordinary shares, okay? So the ordinary shares represent the residual corporate interest. So this means that when there are dividend declarations and the preference shares are given the priority to receive the dividends first in line, ang sobra sa dividends nga gi-declare will go to the ordinary shareholders. So they receive the residual interest. So kung dako pa ang salin sa dividends or even the proceeds on the sale of the net assets during the liquidation. So kung dako ang sobra, dako sa dilang mabahin. Okay? Then ordinary shareholders are also guaranteed neither dividends nor assets upon dissolution, but they generally control the management of the corporation because of the right to vote and right to attend in the shareholders meeting. So you have to take note that if there's only one class of share capital that will be issued by the company, it should be the ordinary share capital. Okay, so the corporation code does not allow issuing only preference shares without the ordinary share. So if you're going to issue only one type of share, then that should be the ordinary shares. Now let's go to the preference share. And what would be the preferences or the priority of the preference shareholders? So the preference shares are shares that give the holders certain preferences over other shareholders. So that would include priority claims over dividends or and net assets of the corporation in the event of liquidation. In exchange for such preference, because they're the ones given the priority to receive the dividends, they have to sacrifice certain inherent rights of the ordinary shareholders. So one purpose of issuing preference shares is to broaden investor appeal, thereby increasing the corporation's opportunity to generate equity financing. So you may ask, now, why is it that the ordinary shares will still have residual interest after giving priority to the preference shareholder? So if you're a preference shareholder, there is a preference rate na siya percentage, di ba nga makita na mo indicate ito nga 5% preference share. So this means that the preference rate is 5%. So the preference shareholders shall receive dividends equivalent to 5% of the par value of their outstanding shares. So kutubra jud adto. So for example, if the outstanding share of the preference shareholder is 1,000 pesos, kintahay mao na ang par value sa yung outstanding preference shares, and then ang preference rate kay 6%, ang madawat niya nga dividend is kotobra 60 pesos. Okay? Even if dako ang dividends nga i-declare. Kay wala man siya nag-base ang rate nga preference rate, dili man siya i-multiply kung pila ang dividends. I-multiply man siya sa outstanding nga par value sa ownership sa shareholder. So kung dako siya og ownership, so kung ang value sa iyang ownership is 100,000 pesos, so kung ang preference rate kay 5%, so 100,000 times 5%. So that's 5,000 nga dividend. Bisan pa og minilyon ang gideclare nga dividend, kutobra gyud ang ma-receive nila sa percentage sa ilahang ownership and not percentage of the dividend declared. Unlike sa ordinary shares nga, pagkahuman nagihatag ang mga dividends ngadto sa preference shareholders based on the preference rate multiplied by their outstanding preference holdings, ang sobra adto kay nag-declare 1 million, ang tanang sobra adto bahin-bahinon sa mga ordinary shareholders. So kung dakog sobra, dako silang mabahin. Kay bahin man to siya according sa number of shares pod nga imuhang gi-own. In proportion man siya sa ownership sad nimo. So for example, ang salin sa 1 million kintahay is 900,000. So kung pila imuhang portion sa ordinary shares, so kitahay your shares is 10,000 over 100,000 ka shares. So naakay 10 over 100. So naakay 10% adtong nabilin nga 900,000. So dako kag mabahin. Kung gamay pud ang salin, kita 100,000 na pud. So imuhang dividends would be based on the remaining amount but in proportion to your own ownership. So 10% of 100,000 pesos. So nga na. So kung dako ang sobra, dako pod og mabahin. Unlike sa preference shares nga ma-fix siya in the sense nga mag-base siya o sa preference rate. Then we have the share premium. So the share premium is the also called as the additional paid-in capital. So this arises from various sources, which include the following. If there is excess of the subscription price over the par value or the stated value, if there is an excess of issuance price over cost of the treasury shares issued, there's issuance of or origination of other equity instruments like options, detachable share warrants, and equity components of compound financial instrument. If there's distribution of small stock dividends and quasi reorganization and recapitalization. Now let's go to the accounting for share capital. So using the memo entry and the journal entry method. So on January 1, 20X1, ABC Company received authorization from SEC to issue share capital for 1 million pesos divided into 10,000 shares with par value of 100 per share. So so the 1 million nga authorized nga capital is composed of 10,000 shares at 100 pesos. So if it's a memorandum entry method, the authorization of the capitalization would be recorded as a memo entry. So it will be written as, for example, the authorized capitalization is 1 million divided into 10,000 shares with par value per share of 100. If it is journal entry method, then there will be a journal entry. So that's debit to unissued share capital and credit authorized share capital. So the authorized share capital represents the maximum number of shares fixed in the entity's authorized articles of incorporation that can be subscribed and issued to shareholders. So this is the maximum amount that you can sell nga number of shares. The unissued share capital represents the portion of the authorized share capital that is not yet issued and still available for subscription. So, mani siya ang wala pa nahalin. Because when we say issue, in consideration with shares, so it means ibaligya. So, kung mo yung tag issue shares, it means we sell the shares. So, if it's unissued, meaning wala pa siya na baligya. Next, we have subscription at par. So, at par value. So, of the total authorized share capital, so remember our authorized share capital, that's 1 million pesos divided by 10,000 shares. So 10,000 shares, out of the 10,000 shares, 25% was subscribed at par value and 25% of the total subscription was paid at the subscription date. So the entry would be debit to cash. So that's 1 million pesos, di ba? That's the total authorized share capital. 25% man ang subscribe and then 25% ang nabayaran sa mga subscribers. So that would be 62,500. So let's check if that's correct. So 1 million times 25% times 25%. Okay, so 62,500. Then, the remaining unpaid portion So 1 million times 25% times 75% would be the subscription receivable. And then credit subscribed share capital, which is equivalent to 1 million pesos times 25%. And credited that to subscribed share capital, 250,000. In computing for this one way or one technique I would do is I will get this amount, okay, this amount, and then compute for the cash that was received, and then balancing figure na lang largo ang subscription receivable. Anyway, katong wala mabayari, mao man gyud siya ang receivable. For the journal entry method, so that would be the same entry. Okay? Wala man siya term about unissued or authorized, so same entry lang po sa journal entry method. So the subscription is a contract between the purchaser of shares, which is the investor, and the issuer, which is the corporation, in which the purchaser, promises to buy shares of the issuing company's stock. So kung sa pagpamaligya pa ni nor ordinary sale, that would be a accounts receivable. But if we're talking about issuance of shares, so that should be subscription receivable. Then the subscription receivable represents the unpaid portion of the subscription price, and this is treated as a deduction from the related subscribed capital. So kani siya i-deduct siya ani inig present nimo sa shareholders equity. Then the subscribed share capital represents the portion of the authorized share capital that is subscribed but not yet issued. It's not yet fully paid man, so that's why subscribed pa siya. What if the some of the shares or 2,000 of the subscribed shares were collected? So on February 1, ABC company received full payment for 2,000 subscribed shares and issued the related share certificates. So for the memorandum entry, so that would be debit to cash. Okay, so that would be 2,000 shares. Di ba, to siya na fully paid, times 100 pesos, which is the par value, and di ba, ang issuance kay at par value man, times 75%. Ganun 75% man siya, ma'am? Because di ba, the 25% was already paid. So, 75% na lang ang wala mabayari. So, that would be 150,000, and credit subscription receivable, 150,000. Next is we close the subscribed share capital because the 2,000 shares are fully paid. So we credit now the share capital. But you have to take note that if the transaction tells you that it is an ordinary share, then you should credit the type of share. So for example, if the share issued is ordinary, so you need to credit ordinary share. Or if it's preference, then you credit preference share and not simply share capital lang because daghan man ang types of shares. So, dapat ma-identify na to unsa man to siya nga klase nga share para mas dali ang pag-record sa mga transaction. In the journal entry method, the entries are the same except that instead of share capital, you need to add an issued nga word before the share capital because the authorization of the capitalization is debit to unissued share capital and credit to authorized share capital. So, dapat kuhaan man ang account title nga unissued share capital. So, man nga, mausad ni ato hang i-credit. So the share capital represents the portion of the authorized share capital that is already issued. And share certificates will be distributed to those subscribers who fully paid their shares or the subscribed shares. So the share certificate is the evidence of the ownership. So under the corporation code, shares are issued to subscribers only upon full payment of the subscription price. What about subscription at above par? So what do you mean by above par? So subscriber gibaligyan nimo siya above the par value. So, di ba, the par value is 100. And what if you sell it above 100? So, in this example, it is issued at 120 and 40% of the total subscription was paid at subscription date. So, that would be, okay, so this would be the entries. So, the number of subscribed shares in this problem is 1,000 shares. Diba? And times 120 peso subscription price and 40% was paid. So therefore, that's 1,000 times 120 times 40%. So that's 48,000. Then to get the subscription receivable, so we need to get the total subscription price. So 1,000 times 120. And then the remaining amount after you deduct the payment from the subscribers, 48,000. So the remaining amount is your subscription receivable. And your credit here would be the subscribed share capital, which is at par. So pag mag-credit ka ni Taani, it should always be at par. That's 1,000 times 100 pesos. So that's 100,000. And the balancing figure is the share premium. So you total the debit and then you deduct 100,000. So that would be your share premium. Or you can also compute the share premium by getting the difference between the subscription price, which is 120 minus the par value, which is 100. So 20 times 1,000, and that would be 20,000. Same here. So for the journal entry method, they're just the same. Same entries lang. What if we collected some of the subscriptions in February 15? So received full payment for 800 subscribed shares and issued the related share certificates. So that's debit to cash, 800 times 120 times 60%. So why is it 60? Because 40% was already paid last February 15. So let's check. So you have 800 times 120 times 60%. So 57,600. Then issue the shares for the 800 shares na fully paid. So 800 times 100 par. So 80,000 pesos. For journal entry method, they're just the same except that we need to use the account title unissued share capital. Next is cash subscriptions. When we say cash subscriptions, the shares are being sold for cash. So in that case, there's no more subscription receivable. Dito na, issue na dayon sa shares. So debit cash, so that's at par man, so 1,000 times 100, and then credit share capital. Then, for journal entry method, so na ay additional nga term nga unissued. What if, ma'am, this is above par? So, the same with the previous na to nga example on the subscription receivable. So, any difference between the par value and the subscription price would be credited to the share premium. Then, what would be the share capital of ABC as of February 28? Okay. So, wait sa So, what would be the share capital of ABC Company as of February 28, 20x1? So, if we're using the memorandum entry method, so the share capital would be 380,000. So, how do we get 380,000? You go over the entries wherein there's a credit to share capital and then you sum it up. That would be a total of 380,000. Then for the subscribed share capital, so initially we have the 250,000 credit, and then there was issuance for the 2,000 shares, so minus 200,000. There is issuance of share katong 1,000 above par, and then we have deduct the issued nga share, so that's 70,000. Subscription receivable, so go over again the entries and then you will get the balance in the subscription receivable. So the total share capital would be 398,100. But if you want to know how much is the shareholders equity based on the existing transaction, so we are going to add the share premium, and the total shareholders equity as of that date would be 418,100. For the journal entry method, it will start with the authorized share capital, which was credited, diba, on the authorization date. And then you have the unissued share capital, so we will deduct that. So we will get the issued share capital of 380,000. Then we are going to add the subscribed share capital, deduct the subscription receivable. So the total share capital will be the same with memorandum entry method. And if we're going to get the total shareholders equity, it would also be the same, 418,100. Next is the contributed capital, or also called as the paid-in capital. So this is the total amount of funds that the company received from its investor, and that's the sum of the share capital and the additional paid-in capital. Since in the problem, there are only few transactions, so your total contributed capital here would be equal to the total shareholders equity. But if there are also other transactions like napay treasury shares, napay retained earnings, so malahi ang total shareholders equity, dili na siya parehas sa total contributed capital, because the total contributed capital is confined only with the share capital and the APIC. So, sa itong APIC, atong APIC ang share premium. So, this will be the total contributed capital. Again, if na ay other components such as mga treasury shares, retained earnings, and other components, the total contributed capital will not be the same with the total shareholders equity. But in this illustration that I presented to you, since wala man tong other items, so parehas si total shareholders equity o si total contributed capital. Then what would be the treatment for share issuance costs? So the transaction costs of an equity transaction are accounted for as a deduction from equity to the extent they are incremental costs directly attributable to the equity transaction that otherwise would have been avoided. For example, on January 1, ABC Company issued 1,000 shares with par value of 100 pesos for 120 pesos per share, and the share issuance costs amounted to 5,000. So our entry would be debit to cash for the proceeds, so 1,000 times 120. And then the share capital will be equivalent to the par value, so 1,000 times 100. And then the share premium would be the excess 120 minus 100, or you can compute 120 minus 100 times 1,000, that's 20,000. And the share issuance cost will be charged against the share premium. So if we're going to prepare a simple entry nga, usaon na nato ni siya, not simple entry, sorry. If we're going to prepare a compound entry, if we're going to prepare a compound entry for this one, so tapuon siya. 120 minus 5, so this would be 115,000. And then your share premium will be reduced by 5,000. So mahimo ni siyang 100, this would be 15,000. So again, if this is a compound entry, your cash would be reduced. So this would be 115,000. Share capital the same, but the share premium would become 15,000. Next, we have the par and no par value shares. When we say par value ang share, it is a share with a peso value fixed in the articles of incorporation, and the purpose of which is to fix the amount of the issuance price. Because if you have the par value, you will price your shares according to the par value or above. Because according to the corporation code, you cannot issue a par value share below the par value. So, therefore, minimum na nga price kung mamaligya ka sa par value share, katong iyahang par value mismo. Or you can sell it above the par value but not below. The par value appears on each certificate issued. Meanwhile, the no par value shares are shares without peso value fixed in the article of incorporation. However, a no par value share has a stated value, which is also indicated in the articles of incorporation but not on the share certificate issued. Okay? So, wala man siya par value but naapod siya stated nga value. Nga ang treatment pod sa problems is mura ra gihapon siya og stated value pod. Mura ra gihapon siya the stated value is mura ra gihapon og par value. I'm sorry. Ang stated value mura ra gihapon siya og par value ang treatment. Kay ang excess sa stated value i-compare mo sa subscription price would be credited gihapon sa share premium. So, pare-parehas na sila role sa par value. No par value shares should not be issued for a consideration less than 5 pesos per share. And the excess of the subscription price over the stated value is credited to the share premium. So, although this is a no par value shares, na siya minimum nga 5 pesos per share. Then we have the legal capital. This is the portion of the contributed capital that cannot be distributed to the owners during the lifetime of the corporation unless the corporation is dissolved and all of its liabilities are settled first. So it is computed as for par value shares, that is equivalent to the aggregate par value of the shares issued and subscribed. If it is a no par value share, the legal capital is equivalent to the total consideration received or receivable from shares issued or subscribed. The total consideration here is the subscription price inclusive of any amount in excess of the stated value. So to illustrate, we have the following details of the shareholders' equity of ABC Company. Requirements are compute the legal capital assuming that the shares are with par value, or number 2, the shares don't have any par value. So if it has a par value, the legal capital would be equivalent to 1,100,000, which is composed of the par value of the preference share capital, the par value of the ordinary share capital, and the subscribed share capital. So walay labot si subscription receivable. Then, if you can observe, wala po ilabot si share premium if we're talking about par value nga share. Because, diba, by definition, the legal capital is the sum of the, that's if the shares are with par value, it is the par value of the shares issued and subscribed. And the issued portion here is kaning preference share capital o kaning ordinary share capital. Then, plus subscribe. For the no par value shares, so the computation is equivalent to 1,400,000. So that's the sum of the par value of the preference share capital, the par value of the ordinary shares, and then we have the share premium on the ordinary shares, and the subscribed share capital. So the only difference between the two is on the share premium for the ordinary shares. So in case of no par value shares, legal capital includes the share premium of the ordinary shares, preference shares can only be issued as par value shares. So therefore, there's no share premium to be included for the preference share. Since we consider this case as with no par value, so the total consideration for the ordinary share is the sum of 800,000 and 300,000. So, di ba ang rule, if no par value share, that is the total consideration received. Nga, di ba, ang total consideration received is the total subscription price. And ang total subscription price is kaning sum ani nilang duha. So, we need to take note that preference shares can only be issued with par value shares. That's why nga walay labot ang share premium sa walay labot ang share premium sa preference share ani because dili man siya matawag nga no par. So kutob ra siya sa iyang par value. So ang no par ani is applicable only sa ordinary shares. Okay, so ang ordinary share pod nga share premium ang pwedeng ma-appeal sa legal capital pag maghisgot ta og no par ordinary shares. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.